Hey there, this is Robin Hart of the Home Loans with Hart team, where we work hard every day to help you and your clients build wealth through the financing of real estate. This is our weekly market video where we share with you some insights on rates, housing, and other important news. All right, let's kick off with the rates. Those pesky rates are coming down, but slowly, like molasses. 30-year fixed is sticking to 7%, while the 15-year and the 30-year have finally dropped down to 6.3%. Now, what's been happening in the mortgage and credit world? Well, earthquakes, my friends. On February 1st, Donald Trump terminated Rohit Chopra's tenure as the director of the Consumer Financial Protection Bureau, otherwise known as the CFPB. The new acting director, Scott Bessent, who is also Treasury Secretary. In one of his first acts, he ordered all staff members to immediately cease much of the Bureau's work unless expressly approved by himself, the acting director. Now, you might ask, what the heck is a CFPB? Why would we care? Well, CFPB was solely created to protect consumers and go after big banks and other lending and financial institutions when they don't follow the law. It was created after the 2007 to 2010 banking chaos. So essentially, it's the single protection for homeowners and credit users, as well as asset holders. That's right. They go after banks. So if you're looking at just holding your money in and you don't even have a mortgage, it could definitely be a problem. So as a consumer, if you felt like you were treated inappropriately, if there were illegal actions, you could fire off an email in the organization and would basically investigate to ensure the larger institution didn't cross an inappropriate line or, an illegal line. So now they no longer are operating with the exception of specific duties as outlined by the new acting director. And in another effort of deregulation, the Federal Reserve terminated 2 mortgage-related enforcement actions against Wells Fargo from more than a decade ago. Again, think 2007. These enforcement actions dated back to a fine allocated in 2011 when the Fed assessed an $85 million civil penalty against Wells Fargo over allegations that employees steered potential prime borrowers into more costly subprime loans. It also accused the firm of falsifying income information in mortgage applications. Many people lost their jobs and many people lost their houses. It was the central bank's largest penalty ever in a consumer protection enforcement action. So what does all this mean? Well, all these items point to deregulation is ahead of us or actually currently with us. Yes, a cutting of red tape and more market excitement. There will be a period of frivolity and market gains. I'm expecting for there to be a lot of excitement, a lot more banking going on, a lot more people wanting to build more houses and actually do more loans. But I do caution everyone on this note. There was a reason why these civil fines were produced and why the CFPB was actually created. Now, there has never been a period in history of deregulation that did not follow a pattern. Okay. Now, once deregulation occurs, markets go up, not denying that. But shortly thereafter, costs also follow that upward trend as well. And finally, there's always a few bad actors that seem to ruin the system for everyone else in their exuberance. So think deregulating, give a prime example basically would be deregulating the electrical markets in Texas, followed by an increase in the electric bills that many people saw 2 and 3 times more than they had previously seen. And then, well, think finally Enron. But no worries, that's for another video, another time, another day. All right, let's get into the fun stuff. So this is cool. Astronauts are now whiners. So when they're told to stick around for way too long in outer space in very close confines, they make the most of their extended stay. The Boeing Starliner crew, our NASA astronauts, Suni Williams and Butch Wilmore, are making the most of their extra days in space by performing additional spacewalks. They're also studying microorganisms while they wait on their ride home in March. Okay, and here's our meme of the week. If you remember Titanic, when Grandmama was dropping the jewel of the ocean into the ocean, and this is pretty funny. I'm gonna drop it in the ocean. Maybe not, Grandma. I have $80,000 in student loans. Okay, so at the end of every video, we do try to address when is the best time to buy. And honestly, well, it depends on you, the individual. So guess what? Ask a few questions of yourself. How's your credit? Do you have a job that pays you good money that you can consistently count on? Do you have over 620 credit scores? Can you pay your bills and put some money aside? Do you have about $3,000 to $5,000 so that you can pay for some upfront cost, even if you need a gift or plan on using a gift or maybe a down payment assistance program? These are the 4 basic questions you need to be asking, because the rents that you pay, those have an interest rate of 100%. Landlord's never going to pay you to move out, but you get to sell a house. So if you like this video, thank you so much. Please follow us on LinkedIn, Facebook, YouTube, and the artist formerly known as Twitter. We are the Home Loans with Hart team, where we work hard every day to help you and your clients build wealth through the financing of real estate. Happy Valentine's Day, and I hope you guys have a great week.